Welcome back, champions. Another mind-boggling stock news. Here are the top 7 stocks to consider for investment in March 2024. Number 1. AZK Company Inc. The AZK Company Incorporated makes low-maintenance and environmentally sustainable outdoor living products. The company reported fiscal first quarter earnings of 10 cents, which doubled the estimate of only 5 cents. Net sales rose 11% to $240.4 million from $216.3 million last year. AZK is cautiously optimistic ahead of the traditional spring building season. It raised its fiscal 2024 sales guidance to a range of $1.385 to $1.425 billion, up from the prior guidance range of $1.335 to $1.395 billion. Analysts like what they saw. 6 earnings estimates have been revised higher since the earnings report, pushing the fiscal 2024 estimate up to $1.13 from $1.01. Analysts were also bullish about fiscal 2025 with 4 estimates revised higher for 2025 recently, boosting the consensus to $1.28 from $1.20, or another 13% earnings growth. Number 2. CyberArk Software. CyberArk Software provides information technology security solutions. It is a vital security partner to more than 5,400 global businesses, which include over 50% of the Fortune 500 and more than 35% of the Global 2000 companies. With its 72% EPS beat for Q4, the company has now posted 4 consecutive quarters averaging a positive surprise of 76%. Following the recent surge in CYBR shares, the company has now entered the big cap arena with a market capitalization of $11.5 billion. And it will likely remain there as the company's outlook keeps pushing higher for both sales and profits, forcing Wall Street analysts to keep raising their estimates. Number 3. Griffin. Griffin is a diversified management and holding company operating through 2 segments, home and building products, and consumer and professional products. The bullish move has pushed up estimates from $4.09 to $4.80 for the current year, and from $5.25 to $5.97 for next year. Number 4. KKR & Company. KKR & Company is a leading global investment firm that operates a diversified platform across 3 primary segments: private equity, credit, and alternative asset management. Current quarter earnings estimates have increased by 9.5% over that time and are expected to climb 42% YOY to $1.15 per share. FY24 earnings estimates have been boosted by 3.6% and are projected to jump 43.3% YOY to $4.90 per share. KKR's top line is set to expand nicely over the next 2 years as well, with sales forecast to grow 17.9% this year and 18.2% next year. KKR is trading at a 1-year forward earnings multiple of 21.7x, which is about in line with the broad market. Number 5. Ralph Lauren. Ralph Lauren is a major designer, marketer, and distributor of premium lifestyle products with a strong portfolio of globally recognized brand names such as Polo Ralph Lauren Purple Label, Ralph Lauren Collection, and several more. Earlier this month, RL reported Q3 EPS at $4.17 v. $3.53 expected, or an 18% surprise to the upside. Revenues came in at $1.93 billion v. the $1.86 billion expected. The company affirmed FY24 guidance but raised gross margins to plus 140-180 bps v. the plus 120-170 bps prior. Management credited margin improvement to reduced freight costs, favorable channel and geographic mix, and continued growth in AUR more than offsetting product cost inflation. Since earnings, analysts have been aggressively hiking their numbers. Over the last 30 days, earnings estimates for RL have been going higher for all time frames. Looking at the current year, estimates have gone from $9.43 to $10.11 or 7%. And for next year, estimates have been hiked by 6%. Number 6. Molson Coors. Molson Coors is a global manufacturer and seller of beer and other beverage products with an impressive diverse portfolio of owned and partner brands, including Blue Moon, Miller Lite, Coors Banquet, Coors Light, Miller Genuine Draft, and many others. TAP has topped the estimate in each of the last 4 quarters with an average surprise of 37.2%. The full fiscal year 2024 estimate moved from $5.41 to $5.66, while next year moved from $5.58 to $5.96. The forward PE multiple for TAP is just a hair below 11x, and that is rather low considering the 6% top-line growth that was posted in the most recent quarter. The price-to-book stands at 1x, which means the value-oriented will be very interested in this stock as they tend to place more emphasis on that metric. The price-to-sales multiple comes out at just a little below 1x. Number 7. Tradeweb Markets. Tradeweb Markets is a global operator of electronic trading marketplaces, which facilitates trading in a range of asset classes including equities, rates, credit, and money markets. The company has established an impressive earnings history, surpassing estimates in each of the last 4 quarters. Earlier this month, it reported fourth-quarter earnings of 64 cents per share, a 1.59% surprise over the 63 cents per share consensus estimate. Earnings improved 30.6% year-over-year, while revenues jumped 26.3% from the year-ago quarter. Analysts covering TW are in agreement and have been raising their earnings estimates across the board. For the current quarter, analysts have bumped up earnings estimates by 6.35% in the past 60 days. The Q1 EPS estimate now stands at 67 cents per share, reflecting potential growth of 24.1% relative to the prior year. Revenues are projected to climb 19.9% to $394.8 million. Which one would you pick?